Welcome to Option Panit 30 Days Trading Challenge, where we'll get you started with your trading journey or investing journey in 30 days or less. And if this happens to be your first video that you're watching in this challenge, I suggest that you go back and watch the previous videos. And those are really crucial, before starting your journey in a step-by-step manner. You got to figure out what is the biggest challenge or the barrier you are facing in starting your investing journey. And the second question that we also asked as part of your homework was to figure out your key reason, your why, your passion. Why do you want to get into the investing and trading business and prepare yourself for this long haul? Hi all, what's up? This is Manoj at optionpane.com, the number one place for smart traders and option traders all around the world looking for safe, stable, and consistent income streams using options and stocks. And if you have not subscribed to our channel yet, this is also the time to subscribe and hit the bell icon so we can keep you informed with our upcoming videos or the tutorials as well. You see, when you figure out what is going to be your number one reason or your reason to trade or invest, then the second and the most crucial thing is going to be, figuring out your success path. And this success path needs to be designed pretty well. It needs to be equipped with the right milestones, and the definitions also needs to be very clear so that you can have what you need in order to make it successful journey. And I will help you design that journey as well. This entire process of this entire journey covers 4 key elements of investing and trading. I talked about those 4 key elements in the first video, but let's just talk those elements again. It involves the process of trading. It involves the cash flow management. It involves the risk management. And finally, and the most importantly, it involves the trading psychology. Okay, so now let's get into it and define how does the success path look like. You see, when you figured out your reason to invest, then the most important and the crucial part is to figure out your current state and where you want to be. So let's say you are here. Okay, so let's define as you are here and you would like to reach at this place, which is your long vision or your goals. And in order to reach to that state, you also need to define certain milestones along the way, which will help you gauge your progress or the success. Okay, and these needs to be specific, something that you can measure and determine whether you are making a progress or not. And a small abbreviation for that could be SMART goals. And SMART is nothing but specific, measurable, actionable, realistic, and time-bound approach. So these are like the important parameters you have to define. And in order for it to achieve, there will be a time span. Let's call this time as T. You will need a certain period in number of years or months, or depending upon your investing strategy and how successful you are. And let's say at this point of time, you have got $A, which is your starting capital, and you would like to achieve your $B as the final capital, right? And in order for you to move from state A to the state B and develop those many dollars, you will also be generating certain returns. So these returns we can also call, let's say, R. And your final asset at the end of the day is nothing but, this B, $B will be a function of how much dollars you have times 1 plus your ROI raised to the power your time. This is a simple function that will help you to determine, what your future wealth will be when you want to reach to that goal. Now, that may be either cash flow based or capital appreciation based, which we will also again cover in the future tutorials. But this is how the success path will look like. There is no other secret to achieving what you want to achieve. So the key goal here is really simple, being very, very clear and crystal clear about where you are now and where you want to be. And of course, while you want to achieve your vision, then time that will be calculated automatically, or you may already be at the state where this time is limited, and this ROI is something which is variable depending upon the skills and the systems that you have. So in this tutorial, particularly as we move through, I'm going to help you with four key elements that are going to help you figure out where you actually are. And then in the future tutorial, we will cover the ROI, the time, and the money which is required, or the cash flow which is required to sustain the lifestyle that you would like to achieve. Okay, let's dive in and figure out how and where we are right now. Let's determine what those four key elements are that will help you to find out where you are in your journey that you are about to begin. So just take a piece of paper, and A4 size paper, and divide that into actually four sections. The thing which I'm going to show you was actually popularized by Robert Kiyosaki in his Cash Flow, but I will just put it together in a very, very simple way to think about and use it in your a daily assessment. Now, some of you might be familiar with the investing. You know that each company has this own balance sheet, right? They look at their assets, they look at their liabilities, they look at their P&L statements, cash flows, and etc. So why would that be different for you as an individual? You are an individual entity, and that's what I'm going to help you in this tutorial to figure out how to do that in a simple manner. So on top corner, you can look at your revenues, and then you can also look at your expenses. Now, at the end of the day, your revenues are nothing but basically your income currently. Okay, you may have one source of income, you have multiple sources of income, or whatever that may be. So you determine your revenue, and then you also look at your multiple expenses that you're going through, because ultimately revenue minus expenses is what you will get as part of your savings, right? And there is no magic bullet to it. It's a simple number crunching just to look at it. And let me also tell you, based upon my experiences and conversation, 8 out of 10, yes, 8 out of 10 people have not even reviewed these numbers in the last 6 months. So it is really, really extremely important to look at what sort of revenues are you generating and what sort of expenses you have, because based upon this itself, you will be building your balance sheet, which is consisting of assets and the liability. Now, excuse my handwriting; it's not really pretty, but I hope you get the idea that I'm trying to communicate in this. So your assets and then your liability. So what is an asset? It's a very, very simple definition of an asset that is helping you to produce your revenues. That is helping you to generate income is will be considered as an asset, and something that is consuming or rather increasing your asset, your expenses, is basically a liability. So it's a simple way to segregate your balance sheet and figure out what are the assets you have and liabilities you have. And it is really crucial to see that, because this asset is what will help you to increase your saving and then finally grow. Now, if I talk about even that part itself, when you figured out your income statement, you figured out your balance sheet as well, and you figured out how much money you save, the formula really becomes simple, because the savings or the growth, future growth, is only going to come through these savings or the multiple revenues. You see, the power of doing this analysis right in the beginning is enormous, because it will open up your mind that you need to build certain additional revenues, and also that you may have to reduce certain liabilities or certain expenses so that the capital is free. Now, why it is important? Imagine you want to open a trading account, and when you want to open a trading account, you want to fund it. And how do you fund that account? You fund based upon the assets you have or based upon the savings you have. You will also develop a continuous funding plan as well. And that continuous funding plan cannot be done unless you have done your numbers analysis at home itself, or looking at your own capital availability. These numbers are absolutely crucial in terms of determining your long-term success. You can't just randomly say, okay, I'm going to invest 1 lakh rupees or 10 lakh rupees or $100,000 or $10,000. It cannot be just arbitrary number. It needs to be a methodological approach. if you really want to make it big as a business. You see, if you were to establish a restaurant business or any factory or something, you have to assess the capital available for you, isn't it? And the capital available is a function of whatever you are generating, from whatever income engine you have, and at the same time, whatever income you can or capital you can source. So once you figure that out, then you would know what are the limits of the money or the funds that you can bring for your investing and trading, and what sort of strategies you should be choosing to continuously grow your capital so that your current job or your full-time work is also not affected. If somebody tells you that, just do this and you will be becoming a multimillionaire, and so it's not going to happen, that's crap. You do have to figure out the numbers, so you have a meticulous process in place. So these four elements of looking at revenues, looking at expenses, looking at your assets, and looking at liabilities. And also, there are some simple ways to reduce your expense. When was the last time you actually went through in detail of your credit card statement? It's not a rocket science simply, but it astonishes me by just having these conversation with lots of people around the world. Many of them, a wide majority of them, are not even looking at the credit card statements. So just go back and look at it. Maybe there are certain things that you are paying currently which you should not be paying, or maybe there are certain things that are accumulating that you can simply just cut off from that list and save additional capital. Whatever capital you're going to save will be adding to your savings finally. Now let's look at it and draw a path for your financial freedom or your financial goals. It's like this. For example, you have the dollars here, as I was talking about assets, and then you have the dollars B here, right? And this is your final state of goal. You will have it ROI here, okay? And this is the time that you need in order to make it happen. Really, there is really nothing else that you need other than this, and there is no other rocket science as well. Now, when we reach out into the future tutorial or the next tutorial, I'm going to talk about how to even think about the ROI, and also how to think about the time. It may look like that, it's a massive task. You need massive amount of capital, but you will be surprised that massive amount of capital need can also be crunched with a very, very disciplined approach by identifying the key levers or the key variables that actually affects the final performance. So for example, even if you look at the ROI, there are actually multiple ways to look at ROI. Many people don't even have an idea of what sort of ROI they should do. They will look at on this video or that video that somebody has made gazillion dollars, somebody has made thousands of percentage, and so on. These are not realistic targets. And you are setting up yourself for failure by doing that. So how do you even find out what is the right ROI? And I will be introducing you to 3 methods to find out ROIs and then choose the right one that actually applies to you. At the same time, this time that you look at it, in some cases, yes, it cannot be shifted, but in some other cases, this time can also be managed. Now, if you are thinking about, okay, this sounds basic. Actually, it's not basic. I've seen time and time again how many people are not really even doing this stuff, and they're struggling. And they're especially struggling when, they have developed certain trading habits and investing habits. And then it is very hard to remove it. So that's why it is absolutely critical to have this information right at the beginning, to think about like, what do you need to set you up for success. Once you've figured out, like, of course, I'm going to talk about the ROIs in the future videos, but once you figured out your ROI, once you figured out your capital that you have currently, once you figure out your targets, you will be setting up for choosing the type of trading and investing you will be doing. Okay, and this is what I meant when I talk about that there's certain basics needs to be done correctly, and unless those basics are done, you will be just trading randomly. I'll give you some examples. You might be influenced by, let's say, one trade gives you let's say your ROI, annual ROI that you're looking at is just plucking a number, maybe about 25%. So you may say that in 1 year I want to make 25%, but when you look at one single trade, are you looking at What percentage are you looking at to make from that single trade? Are you looking 25%? If you're talking about 25%, 25%, 25%, 25% over a period of time, that's not really 25% per annum, right? And then you will get lost into these winnings and losses and winnings and losses, while you will miss out the big picture of growing your wealth. And that's where this pre-analysis is really important, to figure out where you are currently and where you want to reach out, so that you can do the gap analysis and choose the right investing methods and the right trading method for your approach, for your scenario. That's absolutely applicable to you. Okay, so figure that out. I would like you to give this as a homework to do your balance sheet analysis. Don't post that analysis onto the comment section, but do mention that yes, whatever discoveries you had, whatever insights you figured out based upon, and if this tutorial helped you to insight some ideas, and you go back in your credit card or your balance sheets or something, and you figured out that yes, you're having a happy scenario, please do mention that to us. So as part of the next video, I would like to talk about how do you determine what is the right ROI, what are the three different methods to look at the return of investment, and how you should choose your right goals. Those are applicable to you. So stay safe, stay healthy, make a comment. What are your key learnings from this video today? Whatever it may be, write down those things into the comment section below. And I look forward to talking to you in the next video, where I'm going to talk about ROI, a very, very interesting topic. And many people overlook at it. How do you actually even select the ROI for your trading journey or for your trading style? Till then, I wish you all the best. Stay healthy, stay safe. This is Manoj, and I look forward to seeing you soon.